How does whole life insurance work as an investment? My name is Darius.
And I'm Carmen. It doesn't. We just got to talk about it right now. It does not. Let's just go ahead and it does not.
It works as a part of an investment, but not as the investment.
Yes.
And the reason why I say as a part of the investment is because you use the cash value that grows within the policy to invest, not invest in the whole life insurance policy.
Yeah. And when we talk about whole life or even life insurance in general, at least what we think, you should never be investing in life insurance. And the analogy, the best analogy that I can come up with at this time is thinking like you should never gamble with your death benefit. Mm-hmm. Think of it that way. Like, would you go to Vegas, take your death benefit and gamble it? You probably shouldn't. In the simplest form of way at which I can get you to visually see what I'm talking about, that's what you're doing when you take, when you invest in any life insurance product, is you're gambling away your death benefit. And we never want that to happen because we want our family to have a guarantee of protection, not a maybe or an IOU at some point.
Right. And I like the fact that you mentioned guarantee because we use whole life insurance to invest because of how the product works. The product bills guaranteed. It provides a guaranteed interest rate. So what that allows us to do is use that mechanism that grows within the whole life insurance policy, the cash value, to then invest and make more money. It's not an investment itself. It's an asset, but we use this asset to make more money.
Yeah. Think of it as a tool that you use to put a nail in the door.
Right.
Or in the wall or whatever it is, right? We need to take a hammer, and in order for us to drive that hammer the nail through the wall, we have to have this tool. And so for us, that's what we consider whole life insurance with high cash value is the tool that's going to allow us to invest or to accomplish whatever goal that it is that we're trying to do. And that's why there's a lot of confusion out there, I feel like, with insurance in general, with how you use insurance, the execution of it all. So that's why we wanted to make sure in this video we at least lay out those things so that we can hopefully make you all aware of your options and what you can do. And that's why first and foremost, we always say you should never invest in life insurance. And when we say when investing in life insurance, those are variable life insurance products. Those are index life insurance products. Those are things in which you are actually investing in life insurance. And that's where I consider you're gambling your death benefit, so to speak. So when you look at a whole life insurance product, that provides guarantees growth with the cash value and guarantees in the death benefit. And that's the environment that we like to play in.
Right. When you mention variable life insurance and index life insurance, they all fall into the same category as far as like whole life insurance.
Correct.
Or permanent life insurance.
Correct.
They fall into the same category, but these are three different products. They operate
different types
differently. What we're specifically talking about is whole life insurance, permanent dividend paying whole life insurance policy is what we use to invest.
Yes.
Now, a lot of times what happens is people lump it all together, and because you feel some type of way about index, or we may feel some type of way about index life insurance policies, it gives all of the products a kind of like a bad rap.
Yeah.
But what we're specifically talking about in this video is permanent whole life insurance, dividend paying whole life insurance that provides a high cash value, which is what we use to invest. Still, in none of these products we recommend investing in it thinking that you're going to get some type of return. Yes, there'll be more money in addition to the money that you've used to pay your premium that may be misunderstood as a return on investment.
True.
But we don't even want you to mention return on investments or stuff like that.
Or what kind of return can I get in my policy?
You can't get a return because that's not what it's being used for. It's not investment that you invest in. You use the product to invest. Like Carmen mentioned, the nail and the hammer. This is a tool that we use to invest.
Yeah. So we'll probably say that 50 more times on this video. Just to, again, restate what's going on, because no matter how much we say it in the hundreds of videos we have on YouTube already, anyway, there's still going to be somebody in the comments that says, you guys don't know what you're talking about. You should invest in whole life. We're not investing in whole life. We're using it to invest. So moving on. What have we used whole life insurance to invest in? Darius, do you want to go through that?
Now, just a little story. In order for us to get to this point where we started using this tool for ourselves is we were originally focused on on real estate investing. And for real estate investing, what we found that we enjoyed doing is raising money or private money lending so that we can invest into a variety of different deals. And we came across a private money lender that wanted to use the cash value from his life insurance policy to lend to us and invest. The conversation that we had was different from any of our other private money lenders. He wanted us to keep it for a minimum. He wanted us to keep it for a minimum of 2 years. And if we paid him back early, he was going to charge us a fee. When somebody starts talking differently about how they utilize their funds, we wanted to understand that a little more. And this is how we got to the point where we started using cash value life insurance for ourselves to invest in real estate. Because instead of us having private money lenders, we can just use our policies and use our own funds for our own benefits, and we don't have to pay anybody else interest. So we use this for real estate investing so that we can have more control. After real estate investing, we at this point we were in over $120,000 of debt, because we thought that in order for us to grow our money, we had to borrow money, and we had to have all these cards and websites and things that we didn't have to buy for starting our business. And we used the cash value from our life insurance policies to pay off all of our debt, and we started paying ourselves back the principal and interest we would have paid to those third-party lenders. We used it for paying off our debt. Now that we paid off our debt, we came back to real estate investing. Now we're using the funds to invest in real estate using the cash value insurance. Now, what we are building up for is for a tax-free retirement, because as our money accumulates inside of our cash value life insurance policies, and we pay the money back to ourselves, or the money that we use to invest with our policy, with the tool of insurance, cash value life insurance, is we are able to borrow the money out during retirement without paying any taxes on it. So tax-free retirement, and we're still able to get our Social Security or whatever. If it's still there, we're still able to get all the other perks of being able to not having to show that income on paper.
So it's really awesome, the things that we've learned with being able to use a whole life insurance policy, and how we can flip that to flip more money.
Right.
And with us, like Darius said, real estate is a big thing for us. And so that we have a lot of assets as far as real estate is concerned. That's our priority right now. We've also continued to have the conversation of, okay, how are we going to get involved in the market? How are we going to start using that to be to provide different return? How are we going to use that to diversify what we already have going on? We've already done several equity deals as far as businesses are concerned, where we're contributing to businesses and have equity deals in play. So that's why for us, it's important to have a foundation or a storage vehicle in which we can hold cash. And then when the time comes for us to liquidate or utilize that cash, we're going to take a loan from our policy and we use it to invest. And so we're always trying to practice what we preach, as far as the things that we tell you guys are the things that we are working on ourselves or have done. And so, Darius and I are always looking at how can we continue to diversify, because we recognize that for a good majority of our investment years, we were just focused on real estate and we didn't really do anything else. And so now, as we're getting older and wiser, we're recognizing, okay, we need to start looking into different investment vehicles. What is that going to look like? Is it commodities? Is it precious metals? And now we're starting to do research and figuring out, okay, where else can we place the money from our life insurance policy into these different assets that we need to cash flow for us?
Right. Yeah, because our network changed over the years, and we noticed, or it was brought to our attention, that in order to be diversified, you need to be diversified across asset classes. So real estate is one asset class, equity is another asset class. Then you have commodities, and you have cash, which is another asset class. So what we want to do is be diversified across different asset classes, and we use our cash value life insurance to help us do that. Now, in the examples or in the conversation that we mentioned, we never said we were investing in whole life insurance. We're using whole life insurance cash value to invest across these different asset classes.
Exactly. And lending is another big one that we've done for many, many years, where we're either lending to ourselves, we're lending to third parties, because we all know that at the end of the day that someone is going to need some sort of financing in some way, shape, or form. And so if we can take the place of the bank when it comes to family members, friends, business partners, whatever it is, it allows us to have a really amazing opportunity to, one, help that third party, but then also to, again, replace the bank. So now we're collecting the principal and interest.
Right.
And lending is one of our favorite ways to invest.
Yeah. And to be honest, we don't quite lend to family members anymore.
That ship sailed?
Yeah, that ship sailed. But that is something that we did start off with. And in order for us to have an opinion about something, we first did it first. Mm-hmm. Now, a lot of times the people that they comment on stuff that they haven't done themselves. Mm. So if you notice that we a lot of times talk about the same thing over and over again, or we're always harping on whole life insurance, we're talking about the things that we've actually done. Mm-hmm. Those are the only things that we can give you our opinion about.
Yeah, exactly. So if you too want to utilize whole life insurance with a high cash value to invest, then definitely click on the link below. We would love to serve you at the Wealth Nation. And then also join our community, because we have so many other students inside the Wealth Nation community that are doing it as well. And they have amazing tips, tricks, and solutions to help you. And we created this community because we recognize that just us as agents and our team, where we all sell life insurance policies, but we also wanted to come together and bring people together of like-minded, of curiosity and drive, who can learn from each other. So that's why it's important. If this tickles your fancy, then definitely click on the link below. We would love to serve you in any capacity.
Right, because it's really important, because this isn't taught mainstream. So it's important for you to be around another group of people that are speaking the same language as you are. Because for the most part, if you go and you tell somebody that you're using your life insurance policy to invest in the stock market, they're going to call you crazy. That's what a lot of people show up to comment section to do. You guys don't know what you're talking about. That's perfectly fine. You know, when you think about the 3,000 billionaires that exist in this world, probably a lot of people think they're crazy too. Mm-hmm. But they're worth billions of dollars. In order for you to really understand or do something that really finances or drives your financial purpose forward, you have to do something different from everybody else, because most people are in debt. 60% of Americans are in debt or some type of financial hardship. So you can't do what majority of people are doing.
Correct.
So we have to think about doing something differently. And the reason why we like life insurance is because this is exactly what the banks use for themselves. So if it's good enough for the banks, I don't hear anybody saying that
the banks are crazy.
The banks are crazy, but they're saying I don't want to give them all my money, but we don't have a lot of people don't have a choice.
Yeah. I'm glad that you brought that perspective, because I was thinking that too. Like when you have to decide what it is that you want for yourself, whatever financial freedom looks like for yourself, you then start to go down different avenues and rabbit holes where you start exploring what does financial freedom look like. We have been down many avenues and rabbit holes where financial freedom looked like to us selling everything that we owned and moving across seas. We have downgraded, upgraded. We've done everything under the sun as far as our lifestyle is concerned, because we were craving freedom. We got clarity on what freedom is. And once we got clarity on what freedom is for us individually and also together as a unit, we started driving down that road of what financial freedom looks like for us. And so that's why for you need to figure out what that means for you. And what does freedom or financial freedom look like for you? And how are you then going to go about getting it? Because sometimes it's just as easy as breaking down the numbers of how much do you need to live off of? Like, you know, the basics. What do you need to live off of? And then reverse engineering that whole strategy to figure out, okay, what do I need to do to make sure that at least my expenses and paying myself first is covered? And then how can I have a party and do whatever it is that it makes sense for us? And once we understood the value of having an asset such as whole life insurance and how that could allow us to accelerate our gains with investing, we said we got to double down on this. And so that's why it's something of value to us, which is why this is what our whole channel is based off of, is what can you do with whole life and how creative can you get and how aggressive can you get to achieving financial freedom and owning your own lifestyle, because that's for us, that's what it's about.
Right. So if you can't write a check right now for $100,000, or you don't have a net worth of over $1 million,
how do you get there?
No, then you should be listening to us. If you have if you have more than that, then we're not the people you should listen to. You should always listen to somebody that has more money than you do. Mm-hmm. And I've said it before, but a lot of times we take advice from people that aren't qualified to give us advice. Who is giving you your advice? Where are you getting your advice from? That's going to be key to the type of success that you're able to create for yourself. And right now, the route in which we took to get to where we are now is because we understood that we needed some type of tool that allowed us to do two different things. Be in two different places at once. We're able to have a life insurance policy that is guaranteed to have interest, and we're also able to leverage those funds while it's still earning interest to then invest.
Yes.
So the investment that we use the cash value for is how we earn our money. That is the investment. The insurance policy itself is not an investment.
And it just, again, like I said, we said it 50 times on this video, and we're going to continue to say it in future videos, because if you don't understand that basic concept of what it is that we're trying to do, it's going to be confusing, and it's going to be an uphill battle. And if you continue to drink the juice and believe that you can you can invest within life insurance, then to be honest, it might be challenging for you. And we can only speak that from experience, because our family has invested in life insurance, and we saw the route that took them, and everything that we had to do to get them back onto a right path where they weren't literally gambling their life insurance away. We've had hundreds of clients come to us and say, hey, can you look at this? These numbers don't look right. And we look at the numbers and we're like, no, they don't look right. This isn't how it should be. And it's only because we've had these experiences, because we're in the life insurance industry and we continue to see these investments in life insurance. They come to our desk every single day, literally, and we have to help our clients get out of these situations in which they've gotten themselves into.
Right. So what Carmen is talking about is whole life insurance policy, or some type of
permanent life insurance policy.
Permanent life insurance policy. You look at an endorsed illustration, and what it gives you is a snapshot of how that policy is performing. When you look at the policy, you bought the policy with the intention that you're going to earn a lot of interest on that policy, but what you see is the policy go further and further and further down until there's nothing there. And then for the next 20 years, or for the duration of that policy, you see zero. So that's because this policy was designed, I think, with the intention of investing, but it solved the need initially, but this isn't what the policy was designed for. It's not designed so that you can get a huge amount of cash value in the first year and continue to grow cash value if
your money's being invested.
If your money's being invested. What you have to do with a policy, you have to use the cash value to invest yourself, not depend on the insurance company or the product to do it itself.
Yeah, thank you for the breakdown. So if you are in that predicament where you have no idea what's going on with your policy, then it might be time for you to start speaking to your agent, get an endorsed illustration, and figure out what is going on with these numbers and how should it make sense, because you should never, one, outlive a policy, and then two, have the cost of insurance go up because there's no more cash in the policy to pay for itself. So those are things that we want to make sure that you all continue to understand. If you think about the fact that I have to invest in life insurance, never, never, never. It's a tool that we use to help us invest, and that's only using a dividend-paying whole life insurance policy designed with high cash value.
Right.
So if you want to continue to learn from Darius and I on how we use our policies to become our own bank or our own source of financing, click on our next video so you can learn all of the details.
Remember to own your own lifestyle,
or someone else will.